All right, home buyers and investors, is it better for you to get a seller credit and buy down your interest rate, or is it better for you to get the very best price? Super common questions. I've got clients asking me this every single week. Multiple loan officers on the team have come to me and said, this is a really common question. So let's break it down. Which is better for you in your specific scenario? I'm going to use real numbers, real live Excel spreadsheets to walk you through so you can see for yourself which one you think works better for you. Credit towards closing costs and buying down your interest rate, or going for the very lowest price? Stay tuned. I'm going to jump into it. All right, Matt, the mortgage guy, residential mortgage broker, licensed nationwide. If you want to connect me and my team, go to greatmortgagebroker.com. Team will connect with you. We'll get you pre-approved. We'll run you through these scenarios to find out how exactly you want to structure your offers and your mortgage, something that works best for you. So before I jump into it, I just want to preface this with, I can't answer this question as, a one size fits all, and this is going to work for everybody. But hopefully this video provides some context and you can see for yourself what works for you. Using real life numbers, I think, is always a great way to look at it and go, you know what? I didn't think about it, but based on what I'm trying to do and what's important to me, it looks like that's the better option. And that's what we're trying to do. In all of our advisory calls and all of our conversations with clients, we want to dig out of them what's important to them and structure a mortgage around that. So without further ado, I'm going to pull up an Excel spreadsheet and walk you through a scenario to kind of get a feel for what things you should be thinking about and what you're going to want to talk through, whether it's with us and our great team, again, greatmortgagebroker.com, or whether it's with another loan officer you're working with. So let's paint a hypothetical picture. Let's say that you've identified a house that's listed at $510,000. And talking to your real estate agent, you say, it's a nice house. This fits what I'm looking for. It's been on the market for 36 days. Think we can go in there and get a good deal on it? And the realtor goes, yeah, they're going to negotiate with us. And we can probably get it somewhere in the $485,000 range. Now, the question to you as the buyer, would you rather have the house at $485,000 with no credit, or would you rather have it at $500,000 with 3% or $15,000 in seller credit? In this scenario, the seller essentially nets the same, whether they sell it for $500,000 with $15,000 in credit, or whether they sell it at $485,000. It's the same $485,000 that comes to the bottom line for the seller. So you get to decide, especially if you're in a market where you've got a little bit of leverage as the buyer, on which one of those you'd want and which one of those you want to present as an offer. So let's just look at the numbers and then we'll talk more about it. Here we have a $485,000 purchase price with 10% down and a 5.99% interest rate. It's maybe an expired interest rate. This is not an offer to lend. This is just for example purposes only. NMLS number 1088993, not an offer to lend. I think I just have to make that clear. There's some compliance issues. So we've got 5.99 interest rate and a 436.5 loan amount on this 485 purchase with 10% down. Principal and interest, taxes and insurance, property taxes, about 1.25% in California, and the homeowner's insurance, all in payment of $32.53. Then we've got, title fees. We've got prepaying taxes and insurance. We've got all this stuff to where you can count on bringing about $57,500 to close and paying $32.53 a month. Now, there's two different ways to use the seller credit. There's actually probably more than that, but the two ways that I'll present to you is we can use the seller credit in our hypothetical situation where we buy for $500 with $15,000 in credit to buy the rate down permanently, or to do something like a 2-1 buy down. So first, let's do a permanent buy down. Let's say that you got it for $500,000 and the seller is willing to give you 3%, or 15,000 in credit. I know after doing some research, this specific scenario, if it was 599 without any costs, you could get it to about 529 for a couple points. And let's call it 2 points. 9,000 of your $15,000 in credit is buying you down to 5.299. And then down here, we'll say that you've got that 3%, 15,000 in credit. Now you paid 500. And remember in the 500K scenario or in the 485K scenario, you were paying $32.53. That was the number per month. And you were bringing $57,570, I think was the number. Going off memory, but I think that's it. If you structured it this way, you could use 9,000 of that credit to buy your rate down permanently to 5.29%. Saves you about $100 a month, $31.55 a month. And when you go down here and you factor in the fact that you've got 15,000 in credit and 6,000 of it is left over even after buying the rate down, your cash to close is 53,120. So at 500, you've got 53,120 and 31.55 a month. So $100 a month savings, roughly $4,500 a month in upfront costs saved. When you look at those side by side, I don't get to decide. You're the consumer. What's more important to you? The price and ultimately what you owe, right? Because the con, if we want to be honest, with paying $500 is you have a $450,000 balance. If you paid $485, like our first example, you start at $436,500. So you owe $13,500 less from the start. So future refinances, the equity when you sell is going to change based on how you do it. Some might argue this is going to catch up, right? Paying less interest means more is going towards principal, and it's going to catch up to the principal balance of the lower purchase price. But I'll tell you from experience, and I'll tell you a lot of conversations, less out of pocket and less per month is more important to most consumers than the price paid. And I might get hate mail, I might get tomatoes thrown at me that say, listen, Matt, like this person's borrowing an extra $13,500. So what? In 7 years, that spread is probably going to be $1,000 or $2,000 based on it paying down faster with a lower interest rate. But all that stuff is besides the point. It's what fits in the budget and what is good for the specific consumer who's buying it and what they want, right? I don't get to decide. Internet trolls certainly don't get to decide. The consumer gets to decide. Okay, since we did this exercise, let's go and also do the exercise of, and let me put these right here, because now we've got these two scenarios kind of side by side, seeing price, monthly payment, and cash to close. Now let's do a 2-1 buy down where we also do 500,000. We also get 3% in credit, but now we're doing a 2-1 buy down. In the 2-1 buy down scenario, $9,848 goes towards a buy down. If you, I've got 4 videos on buy down. So if you don't know what a 2-1 buy down is, rest assured on the Matt the Mortgage Guy YouTube channel, you'll be able to find plenty of information on it. But you get 3.75 in year 1, 4.75 in year 2, and 5.75 in year 3. In this scenario, we have 98.48 going towards the buy down. We've got 22.50 buying the rate from what we saw, 599 down to 575. So we've still got leftover credit, right? We've still got 2,900 in credit coming off of our total cash to close, where we're bringing 58,005 rough to close. So the benefit to this one and the benefit of the buy down that you'll see in other videos is your year 1 payment is $2,740. Your year 2 payment is $3,004. And it's not until year 3 and on till you get up to this $3,282 that looks a lot like what you'd be getting into if you didn't do any sort of rate buy down at all, right? And a couple benefits of this real quickly, you'll find it in the other video, is any of this 98/48 in seller subsidy that you don't use, if you refinance it after 9, 12, or 15 months, gets refunded to you as a principal pay down. So while you might start 13.5 behind that 485 example, as far as what you owe, if you refinance it with 5,500 left in the subsidy, not only did you save hundreds, I mean, in this case, you're saving 500 a month versus the 32.53 a month in the 485 example. You're paying $27.40, over $500 a month. But if you refinance it after 12 months, if rates happen to come down and you're able to get a 30-year fixed at 4.75 or 4.99, whatever's left gets refunded to you. So hopefully this was helpful. Again, there's no one size fits all. This is up to your specific scenario and what's important to you. Some people might say, listen, I want the lowest loan balance possible. Okay, 485 might be your jam. Others are saying, I want a lower payment. I don't want to worry about, the 2-1 buy down and it change. I just want it to be fixed in and $31.50 a month that fits in my budget. Let's keep it there. Others are like, listen, I'd love to start off $27.40 a month, then $3,000 a month. And if I can't refinance, I still, know that $32.80 is affordable. And I plan on getting a couple raises, whatever the case may be. But it's the beauty of it. You get to decide in a market like this one, where you've got some power as the buyer and negotiating power, you get to structure this however you'd like. You should, and I highly recommend, whether it's with us or with anyone else, be having these conversations with a loan officer, pulling in your real estate agent as well, because when they write offers, a lot of cases we're working with, you don't need the credit, but you'd like it, right? And that's the question from the list side all the time. Does this person need credit? They not have enough money? No, they have the money. They'd like the credit because it's allowing them to structure a mortgage that makes sense for them. So hopefully this was helpful. As you should know by now, greatmortgagebroker.com is the best place to start. We'll get you pre-approved. We'll show you scenarios. We'll get you off and running. Thanks for watching. Hopefully this was helpful. I got lots of other videos. Check out the 2-1 buy down video. Check out the other videos I've got on the channel in regards to mortgage, and we'll talk soon.